Hey guys, it is deal day. I'm Dave Hathaway, and each week we analyze a new property and a new market. This helps us build repetition, discover new markets, and become better investors. This week we are going to analyze a property in Syracuse, New York, a market that I've looked at previously. I don't have any properties currently. The address that we're going to look at is 14 South Street, Camillus, New York, 13031. Might be Camillus. I don't know if it's Spanish. We're just going to go with Camillus. I'm sorry if I'm butchering it. We always look at the overall market first to determine, hey, if this market is good or bad or indifferent. For Syracuse, New York, population has been stable. It's not growing since 2000. So that's an okay sign. Job growth, it's increasing jobs at 2.4% last year. The unemployment rate is at 3%, which is good. And I actually added a new thing. Average salaries for Syracuse is $54,818, which is really low. The reason that this is important is a lot of times housing prices in markets are determined by the salary. If it's in like for say San Francisco, a extremely high salary tech area, you can have bidding wars and property values go up because let's say the average salary is $200,000. So it supports properties going up. If you have everybody in the area making, for say, $54,000, you can't have those houses go up to $800,000, $900,000. It just doesn't support it. People wouldn't be able to afford the property taxes. They wouldn't be able to afford to live there. They'd move somewhere else. So that's why that's important. And we'll be using that metric in the future. So overall, it is an okay market. It's neither amazing, but it's neither bad either. When we go to the Google Street Test for this market, this street looks amazing. There is American flags, there's single family houses. This looks like a street that anybody in America would want to live on. And if you look down the years, which I noticed, the past couple of years, it looks like they're spending money on infrastructure. So you can see just a couple of years ago, and we'll throw the pictures up there was no sidewalk, and then they actually put in a sidewalk, and you can see what it looks like. So those are all positive things. Overall, Google Street Test passes with flying colors. It looks great. Another investor once told me that they invested, and I can't remember who it was, or else I'd give them credit. They invest in streets and they look for American flags. And if there's a bunch of American flags in the street, they know that that block is a good block. I can't verify that that is true, but I know on the bad blocks, there is not a bunch of American flags flying outside of the houses. So moving on to the listing details, this property's listed for $189,900. It's a 3-bedroom, 2-bathroom, single family property. It is 1,728 square feet. It was built in 1890, and it does have a detached single car garage. Looking through all of the pictures, the rehab budget, I'm gonna say is around $10 a square foot. You can probably go less than that, but with that being there, it's gonna be around $17,000. My rehab suggestions are definitely remove the wallpaper and repaint the property. So maybe use a light gray or a tan, add knobs to the kitchen cabinets, and probably put in stainless steel appliances. Looks like they have black now. Looking at Zillow rents and a bunch of the comparable rents around, you can probably rent this property for somewhere around $2,000 a month. That's conservative. I'm comfortable with saying you can rent it for $2,000 a month. Comparable sales, it looks like the house next door sold for $226,000. It is a little bit nicer property, but it's not perfect by any means. It's not a new construction house. I'd say that this house, if you fixed it up, made it look really nice, did a few changes, like I discussed on the suggestions, you could sell it, and we'll go conservative, and we'll go $220,000. Now moving on to the analyzer, what I notice in the analyzer is cash flow is about 7% cash return. That's not amazing, but it's not terrible. With a loan, it goes down to 5.5% return on investment. And then your cash flow is about $252. I don't love that. I prefer somewhere 400 plus per month to make it, a green flag for me. So overall, this is going to be more of an appreciation play and not a cash flow play. Most of those cash flows are going to get spent on repairing items, and other things. So verdict on the property is going to be a thumbs down to be an investment property. But, and I'm going to flash the analyzer back over here, if we put an offer for $160,000, you can see that the cash flow analyzer then becomes good. Gives you a 8.5% cash on cash return, and then with a loan, it gives you a 10.3% return. So I'm a buyer at that point with a cash flow of $403. So you can see if you play around the numbers and utilize the analyzer, you can try to figure out what numbers make this property work and make it make sense. I am a buyer, however, in the market. I'm a buyer at 160, and I'm a buyer in Syracuse as a market. The things that I loved about this market, they have Wegmans, they have Costco, and this is another thing that you want to look for when you're looking at properties. When you look at Google Maps, not only do you look at the street view, I actually look for coffee shops like Starbucks. You know, I try to type in where's the nearest Starbucks, and if you look at the Starbucks effect, this is that properties near Starbucks, there's also what's known as the Whole Foods effect, which is a grocery store that sells high-end groceries, the Whole Foods effect, and properties that are within, and I don't know what the square mileage is, a couple square miles of those establishments appreciate much more than other properties. So, and I look for things like Home Depot, Lowe's. Those are going to make it easy for you to renovate, easy for your contractors, and they've already done a bunch of market research to spend a bunch of money in the market, so you don't have to do that research. Just look for where they are. So those are all saying, hey, this market's a good market to invest in. They wouldn't pour money to build out a store if they didn't believe in it as well. So that is another kind of secret that I look for, and that you should too. And for instance, if you have a property that has really nothing around it and you're gonna have to drive 30 minutes or 40 minutes to the nearest restaurant or to the nearest grocery store, the prospective tenant's gonna know that as well. And they might move in and not know that right off the bat. But after they're going, man, I got to drive 45 minutes to get to the grocery store and then 45 minutes back to my house. That's going to be a big thing. They might not rent. You might have a tough time. So that's why it's important of having those establishments in close proximity. We like convenience as people. I know I love my Amazon 2 hours. There's also a Walmart Supercenter here. I remember looking at the map and seeing that. Overall, love the market. And I need to get this property at a little bit discount, but I actually do like the property. If you find that valuable, guys, I'd love if you'd give the video a thumbs up. If you're invested in this market, put it down in the comments. Where are you invested in Syracuse, New York? Where are you finding returns? There is abundance for everybody to invest in properties, and we're here to help you purchase your first, second, or 10th rental property. And you can look at a bunch of other markets that we've analyzed. We'll put a few on the video that you can look at different markets, but we'll see you on the next deal day, guys.